Maybe they're all going to survive. I suppose maybe none of them are going to survive. But to me, all right, welcome to Talking Investing. I am Tom. This is not financial advice. We are here to talk about all things investing. And today I want to talk to you about some down and out EV stocks. So we're going to hit the EV sector, and it's not the stocks most of you are used to seeing and talking about. I have a list of 5 stocks that have been beaten down pretty solidly. And I want to go through those and take a look at the charts real quick and then show you an analysis that I put together that I think is going to show you just how badly these have been beaten down. Now, I will warn you, these are not everybody's favorite companies. This is none of the usual suspects. This is not a Tesla video. It's not a NIO video. It's not a Lucid Motors video. You know, those are the big dogs, and they're doing what they're doing. However, beyond that, there's an entire EV section that nobody is really talking about. It has been totally beaten down. I will tell you, I have an investment at some level in all 5 of the stocks that I'm going to go through. I believe that as a group, these represent a good risk reward from my perspective. However, once again, this is not financial advice. You guys got to take a look at each one of these individually yourself and see if any of these may represent a good buying opportunity for you. But let me show you what I'm talking about. Stock ticker Solo, which is Electromechanica. They make a 3-wheeled, 1-seater vehicle, so hence the Solo. They also have not started deliveries. The second one is AYRO. The third one is BEEM, which is BEEM Global. They are a solar EV charging station. And the fourth one is Workhorse. And the fifth one is a company called Romeo, and they make ultra-high efficiency electronic battery packs. Okay, this is the chart for Solo. Their flagship vehicle is a 3-wheeled electric vehicle that is meant for a single passenger for basically this is your commute to work. This is a Canadian company. They're rolling themselves out on the West Coast, California, and they're just getting going right now. So if we take a look at their chart, from their high on November 20th of 2020 to what they're trading at right now, which is not their low, that's just what they're trading at right now. These guys are down over 72% this year. So all of these charts are going to be, this is a 52-week analysis, so this is 1 year or less. And for most of these, they're newer companies. So for the most part, their 52-week high is also their all-time high. There are a few exceptions to that. So this stock right now, in the last 10 months, is down 72%. AYRO, from its all-time high on February 10th of 2021, is now trading at $3.78, and that is down 67% from its all-time high. AYRO is another EV manufacturer. They are a last-mile delivery company. These are meant to be sold in smaller fleets to either corporate or university or medical clients. So that's their customer base, and that's what these guys do. Again, these guys are just getting up and running. Their sales are just in the infancy state. So another new EV company. Okay, this company is BEEM, ticker BEEM, BEEM Global. BEEM makes an electric vehicle charging station that is solar powered, and it is 100% off the grid. So this requires no installation. It requires no electrical hookup. So this is a very unique product. And once again, this is made for the same type of customer base. These are to be parked in a parking lot. And each one of these can reach and charge, up to, I think, 9 to 12 parking spaces away. They can charge 6 vehicles at a time. They are made for small charges. So this is a go to work, park your car, charge your car for the day, drive home. So again, these are meant for more campus situations, whether that's a college and university, whether that's a corporate campus for large companies, or, the healthcare industry tends to have very large campus type environments. In addition to that, these cost about $60,000. So really, anybody that wants to be off the grid, you can buy one of these, have it delivered to your house. There is no setup. It's up and running. It takes 1 parking space, and it also serves as a backup generator. This is not meant to be the bulk of our charging infrastructure in this country. This is a supplement to that charging infrastructure. that allows companies and municipalities. That is another big customer for them. So that's BEEM. That's what they do. So you can see they are down 60% this year off of their all-time high. Okay, the next company is Workhorse. From February 3rd of this year, they are down 82% from their all-time high. I have done several videos on this company, and you can check those out. This company is a last mile delivery vehicle as well. However, its purpose is more for true delivery. Their big hope was they were going to get the U.S. Post Office contract, and that was a monstrous contract for thousands or hundreds of thousands of vehicles. So that's the type of delivery they're looking for. They're currently going through an issue where they're trying to increase the amount of payload that they can carry on their vehicle. So they've got some issues that they're working through. But again, they're down 82% off of their highs. So the question is, do they represent a buy at this point? The last company I want to talk about is a company called RMO. These people make a high efficiency energy battery pack that is meant for commercial vehicles. This company also has run into a problem that it needs to solve. There's a shortage on the supply of one of their key components for making these battery packs. So they've had trouble with delivery. So they've had to radically slow down their delivery schedule, and they are way off of their sales goals. However, they have represented that they have a solution for that problem, and they expect long term to not lose any of the sales, and they have quite a big backlog. So this company is down from December 24th, they are down 86%, and they're now trading at $5.26. So those are the 5 companies that I want to introduce today. And I'm going to go to an analysis that I put together to kind of put things in perspective on why I think there's some opportunity as a group in these 5 companies. So this is a chart that shows these 5 companies. It shows their 52-week high. It shows their current price that they're traded at. And it shows the percent decline. Now, we just looked at all those chart by chart. So you can see these 5 companies have declined off of their high anywhere from 60 to 86%. So all of these companies are down dramatically at the moment. So I just want to run through. If I look at these together, Solo has a market cap of about $315 million. AYRO has a market cap of about $134 million. BEEM has a market cap of $275 million. Workhorse has a market cap of $960 million, and RMO has a market cap of approximately $718 million. So just right off the bat, you can see versus the normal EV companies that you may be used to looking at, Tesla's $600 or $700 billion. NIO is $80 million. Lucid Motors hasn't produced a car yet, and they're over $40 billion market cap. What I did is totaled the market cap of these 5 companies, and you'll see this is their intraday market cap on Monday, September 27th. So again, these are estimates. I got these numbers off of Yahoo Finance, so they should be in the ballpark. But again, don't rely on this as financial information. This is not financial advice. Please do your own due diligence and do your own homework. So having said that, these 5 companies all added up, put together, have a market cap of $1,685 million. So I took a stock and I compared it to this one company. Fisker is a company that is looking to make SUVs. And I say looking to make them because currently they have not made or delivered any. Their 2021 sales are 0. Actually, their sales lifetime to date are 0. This year's sales are 0. Next year's sales are likely to be 0. Right now, they are projecting and hoping that they will finish production of their first vehicle in the 4th quarter of 2022. So if they can stay on schedule, they're not even looking to deliver a vehicle until the end of next year. So you've got pretty much a full year from today before they even start to sell vehicles. So this company has a market cap of $4,557 million. This company's actually been beaten down pretty good. It is down 52% off of its 52-week high. Having said that, even down 52%, it's a $4.5 billion company. The 5 companies that I just talked about, all added up put together, only equal $1.6 billion. So this one company that has not produced or delivered a single car, and this is not a knock on Fisker, I'm just showing you an analysis to put things in perspective. This one company is triple the market cap of the 5 companies that I went through. So the question that I ask myself, and the question that I would pose to you guys, is if you take a look at all these 5 companies together or individually, is there the opportunity that one or more of these will emerge, they will get the catalyst they're looking for, and their stock will start to take a run upwards? So if any of these can reach their previous all-time high, they would be a grand slam home run. The other question that I would ask is, between the 6 companies, the 5 that I looked at, and Fisker, is Fisker even going to end up being the biggest out of these 6 companies? I don't know the answer to that. I don't have a crystal ball, but I do know, though, at one point in the last 1 year, people had great confidence in these 5 companies because they were trading at significantly higher numbers. I think the 2 companies that have the biggest pending catalysts are Workhorse and Romeo. Those 2 have a specific problem that they have to fix. So if they can fix that problem and announce that and start production and start delivery, then I think there's potential huge upside for those 2. Of course, obviously, there's great risk. If they can't fix their problem, then they go away. So I don't have a crystal ball. I don't know which 5 of these are going to survive. Maybe they're all going to survive. I suppose maybe none of them are going to survive. But to me, it's a better risk-reward analysis across these 5 companies than it is to invest in just a Fisker, which is triple the market cap of all 5 of these put together, or, for instance, a Lucid Motor, which is also yet to deliver a car and is 30 times the market cap of all 5 of these companies put together. So these are small cap, higher risk stocks, but I wanted to introduce these. I feel like these EV companies have been left behind. Right now, the stock market has already picked what they think are the winners and losers, but I think it's way too early in the EV game to have decided that. So I just wanted to give you guys exposure to these 5 stocks so that you could do your own due diligence and see if any of these are something that you're interested in investing in. That is my update of the small cap EV sector, and thank you for watching, and we will see you in the next video.